I'm going to change it up a little bit with desktop instead of the mobile app, but it's still the same either way. But yes, we are actually, yes, it is 1:01 p.m. here in Las Vegas, Nevada, and the trading day just came to an end just now. Okay, so it's actually we're about to start the after hours portion of the trading day. So overall, it was a red day, another red day. I think today I was down about $750 from the day before. Yesterday I was down about more than $400. So in total, I'm down at least $1,000 from the last 2 days alone, or from today and yesterday alone. Which that kind of sucks, to be honest. It sucks a lot, but you know it kind of gives you an opportunity to build resilience with your emotions, and it gives you an opportunity to build self-control, because when you see all this red over here, you know like, what was that? I think I saw something green just now. What was that? Maybe, or Airbnb is green for a little bit, like 0.1%. But yeah, but when you see all this red, it kind of just like sends us that psychological emotional signal of just panic selling. And there might be a place, well, I'll say very rarely is there a place for panic selling, unless you're like investing in some kind of like junk stock, junk company that clearly doesn't have a future. Then panic selling might be a good opportunity. But otherwise, though, I'm just a firm believer in just holding out for the long term. Okay, think of it. Just try to distract yourself emotionally as best as you can, and just try to take yourself out of the picture. And honestly, I think it just helps. Obviously look we like to look at the markets every day. At least some of us do, maybe not all of us. But we like to check our portfolios out. We like to make new positions. But honestly, I think if you are in that kind of position for maybe a few investors or a few traders, where you can just go weeks or even months without even looking at your portfolio, I'd say go for it. Especially if all you're doing is just looking at the long term, then honestly, that's probably, it might be one of the more healthier things you can do emotionally. I don't know about if it like makes sense logically, but emotionally, um, when you abstain from just looking at this sea of red, and if you can't, like, if it doesn't, like, if you can't handle your emotions, right, when you see the sea of red, if you can, if you remain in that kind of like emotionally compromised state, then honestly, I think the best bet, if at least if you're for long-term investments, is to just don't even look at them. Honestly, unless obviously something drastic changes with the company, then right, then maybe then that's obviously an opportunity to look at it. But like, for me, if I was doing stuff like SPHD, Realty Income, Poshmark, even like AMC and Neo, or even Jumia, right? Like Airbnb, PayPal, Nintendo. Dude, like, none of these, I can't see any of these companies like disappearing within the next 10 years, right? That's always like a good question to ask yourself whenever you decide to invest in a company and purchase their shares. Ask yourself, can you see this company existing 10 years out from now in the future? Like, I'm sure Nintendo is going to be around 10 years. Like, where are they going? Realty Income, I'm sure they're going to be around as well. Activision Blizzard, I can't see them going under within the next 10 years. I'm sure 10 years from now, they will be here. Poshmark, right? AMC, I'm sure AMC is going to be fine 10 years from now, as long as there's not another pandemic going on. Neo, like I said, Neo, like the Chinese Tesla, basically. How are you going to go wrong with that? Right. And again, some of these other like smaller market cap companies like Funware, Orbital Energy X1. You know, you could make an argument that maybe they won't be around in 10 years, but you know, overall, like the majority of my positions, I believe, will still exist 10 years from now. And the general trend is that, you know, stocks in general just tend to go up over time, right? So, you know, this isn't money that you shouldn't need right now. This is money that you should plan on holding at least for a couple years in the future, like for the long term, right? I always like to think of like Nvidia, for example, right? You know, Nvidia has exploded within the past couple years, and just look at where they are now, right? Like, man, look at this. Like 5 years ago, it was like Nvidia was like $40, $35, like literally 5 years ago, right? Like $32. Wow. I bet you would have wished to buy Nvidia at this price, knowing where it is now. Like, look at that. Look, it just kind of like gives more credence, you know, to the testimony that holding long term is certainly never going to fail you, in most cases anyway. And even then, I'm sure Nvidia is still a great buy to this day, right? You know, 76% of analysts say to buy it. You know, the fair value is 400, so you know we might see it go back down again. But yeah, you know, Nvidia, I can't see Nvidia being a bad investment in the long term, to be honest. And again, I'm sure 10 years from now, Nvidia is still going to be around. But, you know, if anything, I would like to use this time to just kind of just grow the positions I have even more. Like, look, even like Amazon, for example. Like, I'm sure Amazon is going to be around 10 years from now. And shoot, I guess I kind of wished maybe I would have bought Amazon today just because I would have been able to get slightly more. But it's whatever, right? I'll just keep keep going into it. But yeah, I mean, we are in a heavy bear market right now, and you know, just hang on for the long term, right? Hang on for dear life, as they say, hodl. So, you know, there is a sea of red. You can't deny that. But honestly, you know, I am very comfortable with all of these positions that I have. At least most of them, anyway. I'm very comfortable with them in the long term. Okay, and you know, obviously we can kind of treat the stock market like a casino, like we have with GameStop and whatnot. And you know, there is a time and place for that, I think, especially if you want to have fun. But honestly, playing it safe is like, I don't know if you can't go wrong with playing it safe, right? Slow and steady wins the race, and I know that might not resonate with some people my age, but you know, I think over time, it's been something that has like proved itself over time, I would say. But yeah, that's about it though, guys. Um, yeah, that's about it actually. There's really not much more I have to say. I will still keep looking at Airbnb. I was like, man, if it just keeps dropping down like this, you know, I'll still keep paying attention to it. You know, Morningstar fair value $75. We'll see if that gets changed. But dude, like, if it goes down, like, I don't know. We still have a long way to go for the month of March, but if it just keeps going down like this, like, this is gonna be a steal in the long term. Like, Airbnb is gonna be great. I feel very confident in Airbnb in the long term, and I can't wait to make a position in it. But yeah, that's about it though. And oh yeah, also like Poshmark. You know, Poshmark is having a pretty bad day as well. But yeah, that's about it though. Um, Bye everyone.